Hello, you reached Manish Patel from the EII Capital Group. This is our weekly Ichimoku analysis for the futures market. Today is May 23rd, 2012. It's been a while since we've done our weekly videos, but we will be resuming those on a consistent basis now moving forward. We just had to do some upgrades to our website and so forth, add more tools and so forth moving forward. But this video does cover everything from commodity metals to heating oil, natural gas to bonds and so forth out there. So we got a lot to cover, so let's begin. This is our normal disclaimer. This is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. This is for educational purpose only. All charts you're going to see are from basically TD Ameritrade, Thinkorswim from TD Ameritrade, and the music you're hearing is from Guitaro. And here's my information here. You could contact us at info@eiicapital.com. You could access our website, ichimokutrade.com. We have changed it drastically, so there's a lot of free resources there once you register for free. You can access free videos. You can sign up for a trial of our heat map service or email service. You also have access to our Twitter, Facebook, YouTube accounts there, and so forth, and all kinds of other videos. If you have any questions, you can email us here or contact us at any of our locations worldwide. Okay? So let's begin. First thing I'm going to do is I'm going to go to our signal service. Over here, this is pretty simple. Red means basically you bet on it going down. Green means you could bet on it going up. Okay, what you're looking, and if you see these yellow numbers here, that means it's overextended. So if you get a green and it's yellow, it means overbought. Too many people have bought, too late to buy. If you get a red and it's yellow, that means basically it's oversold. It's too late to bet on it going down. Okay, you basically what you're looking for are 2s and 4s on your trading time frame, and on the higher 2, 4s, and 5s. So if you look here, first thing I like to do is just look to make sure that the daily and weekly are consistently the same color. If they're not, that basically means it's the counter trend mode for daily for the higher time frames, which means you're in counter trend mode for the lower. If you look here, there's no consistency here. This is red and red, but this is overextended. This is overextended. Over here, the same color, overextended. So really, there's no multiple time frame opportunities right now. That means basically the daily and weekly are not in sync. A lot of these you could see are in yellow and 5s. That basically means they're overextended. That means the trend has already occurred and it's too late to get in. If you try to go in, basically your reward risk is not going to be great at all moving forward. And I'm just going to keep on scrolling down, and you'll see that you're not going to see many opportunities at all. And in fact, let's verify that with our heat maps email module. These are email alerts, and this actually will tell you a 2 time frame opportunities for everything. So you notice there's nothing on the daily at all in a row. So this tells you that there's no 2 time frame opportunities on the higher time frames at all, which basically means everything's already trending or in a consolidation pattern. So you're pretty much in the counter trend mode. The only thing in the midterm, long-term trading that you have an opportunity is basically rice, which is on a 4-hour chart right now, but there's nothing at all on the daily, which is not good at all. That means you need to be patient and wait for the long-term opportunities to occur. If you're a day trader, that means basically keep your risk low and make sure you get out with good profit targets. Because right now the higher time frames are in a state of influx to a point you're not going to get big long-term trends at all until you get something synchronized on the daily and weekly. So let's start going through and start looking at all the charts. So let's go for the futures, and let's start from the very beginning. Let's go with cocoa futures. Remember, on the left hand side is basically your daily time frame, right hand side is basically the weekly time frame. Cocoa futures here on the daily just looks like one big mess. If you look here on the weekly, it looks like it's trying to retest this low here, which is a major support, but this is still ugly to a point it's not worth even looking at. Remember, we've been short cocoa futures from the beginning of the year. Sorry, last year, and that was about it. But there's nothing really going on right now. The opportunity was last year, nothing at all right now. So let's move on. Let's go to crude oil. Crude oil has been an ugly one. You could see here it's being basically bearish trending on the daily time frame. It all started with this big down gap here, which basically broke that major support here at 179, and since then it's never looked back. Basically destroyed any bullish opportunity here at all on the weekly time frame. It's at the bottom of the cloud. So now we're basically entering one big consolidation pattern. If you look at it, some people look at this as a double top, but a kind of inverted double top where you have lower highs and stuff like that. Or you could look at it, sometimes some people look at it as inverted head and shoulder, whichever may be the case. But either way, basically we're at a major support level right now. Resistance level is going to be 93.68 as a minor one. Major is going to be 98.29 moving forward. Cotton, this has been a great trade since the beginning of the year. It's been a great trade last week, too, last couple of weeks. You could see here it basically broke a major support level here, 86.48. It's just been continuously going down over and over and over. So this has been a great trending trade going down. Where it's going to stop, it had a potential of stopping right around 77, 78. It actually moved to a whole new level here, and the next level it could sit there, which we're pretty much right at close to, is 72.03 is the next major support. But if it breaks down there, then it's got basically 66.76 to go to, and the next level is going to be 50.41. So this thing, be very careful if you're trying to short it down. You should already be in it. If not, yeah, it's too late to get into cotton. US dollar index, you can see a bullish trend here on the daily time frame. It's trying to sit there and start a trend on the weekly, but notice basically we're right at a major resistance level right now. So it's going to be interesting to see exactly what happens with this moving forward. If it can sit there and hold and stay above this level, 81.92 for this week. If it could sit there and close by the end of this week above that level, then we do have a possibility of starting a trend on the weekly time frame, where it, believe it or not, does have a potential coming all the way back up to 88. So be very, very cautious of that. But again, be very careful right now. We just broken the resistance level here, but doesn't mean we've really broken it. We got to see some price action follow through in order to say it has broken through it. We'll come back to gold in a minute. Feeder cattle, as you can see, this thing looks ugly on the daily time frame. You could see here, look at this gap. This is why it's very hard to sit there and carry raw futures overnight, especially for a liquid market such as this, because this could be a difference in a couple of $1,000s for people. This is where options comes into play, or just stick to day trading, where it's a lot more safer for, especially for these illiquid futures. Here you could see this is still a bullish trend going up, and it has been. No one even should have been betting this going down. If you were, you're kind of making a big mistake. This is still bullish. If anything, you should be looking for bullish opportunities or anything. This bullish trending in both time frames. So that's feeder cattle. Let's go look at lean hogs. Lean hogs is opposite. Really nothing going on as far as the daily is concerned. On the weekly, if this thing actually sits there and breaks this level right here, and I'll just put an alert right here so that everyone could see it. If it actually could break this level 82.35, this thing is going to start a trend to the downside. So watch out for that. So resistance is going to be 88.30. Copper. Most people look at this because of China and stuff like that. Copper is breaking down to the bearish side. We've been talking about this one to watch it. When it broke out of the cloud here, we told you we had to wait for it to come all the way up, pull back, and it did. This has been a great one. You need one pullback level on the weekly. If you could get a pullback on the weekly level and kind of wait for 2-3 weeks, momentum's going to be on the side and this thing's going to sit there and tank. So definitely keep an eye on copper, where it does have a potential coming all the way down here to retest the low. Ideally, if you could get a pullback and then come down and test this low, it has a potential of breaking that low. But if it sits there and just keeps on going straight down to that level, then most likely it'll form a double bottom here. So only time's going to tell with price action to determine what's going to happen. Heating oil has been bearish, trending to the downside. As you can see, it's just pretty much testing its consolidation pattern here. Right there is the consolidation pattern right now. So we got to see exactly what's going to happen once it gets to 2.7721. Coffee, this has been a great trade going down since the beginning of the year. Remember, we've been looking at this towards the end of the year on our YouTube videos, and then we looked at basically shorting it. We entered shorts. This has been a great trend going down, and this looks like it's trying to retrace the whole thing here. And the next level, believe it or not, this thing does have a potential coming all the way down to is this level here at 152.79. And you could see here that what it did, it went down, consolidated, and then basically broke a minor support level at 171.86, is now trying to get to 152.79, and it'll probably get there very soon, believe it or not. Coffee is very strong. I think sugar is too, which we'll get to. Lumber, this is a silent one that a lot of people haven't been looking at, but be very careful. This thing does have a potential to keep on going up. If it could break 294.60, this thing is going to sit there and make a run to about 326. So definitely look at this one. This means slowly moving up, but there may be a push sooner or later, depending on the seasonality and what's going on with lumber. Live cattle, really nothing going on compared to feeder cattle and lean hogs. So definitely would ignore that one. Nothing really going on there. Natural gas has been everyone's favorite one. This has been bullish trending here. It's pretty much at a major resistance level, which is at right at 22.811. We're already gotten out of this trade right when it retested this pivot high here. So we're out. We're just waiting for it to see exactly what's going to happen now. But in order for it to break the 2.811, it's got to have a lot of momentum to the bullish side. So only time's going to tell if it's going to have that momentum moving forward. We'll come back to the NASDAQ futures and all that. Orange juice, if you look here, wow, look at this movement. Down. If you guys remember this, we were talking about this on our weekly videos on watch out for orange juice. We also got a multiple time frame signal for orange juice on our email service. So this has been a great opportunity to go down, and it's been a huge movement to move down. It is too late to get into this one now, and you could see it's already coming back all the way to retesting all its lows, everything here. So this thing can sit there. It's at a minor support level right now. Does have a potential coming all the way down to 88.46. But it is at a major support level where it just bounced off. But that's one that if you haven't been looking at it, you missed it. Palladium, this is basically a double bottom that's coming in moving forward. So it's basically overextended right now on the weekly and also on the daily time frame, but you definitely need to pull back on this one because this is going to be moving too fast to the lower side. Gasoline, this has been a great one. Look at this double top here. Not sure if anyone realized it. 341 has been a tie. We've been talking about that on our weekly videos, and you know, we was going to have a hard time trying to break there. We were talking about going long here at the beginning of the year and then going long all the way to 341, which was our target. It got there. At that point, we reversed it, and look what's been happening. It got all the way to a major support at 2.95, broke it, and now it's trying to go lower. However, I would not be betting on this going lower. Reason why is the weekly still is controlling things, and the weekly still sentiment still bullish. So even though the daily is tanking right now, it's got some momentum. Be very careful on betting on gasoline going lower right now. It's at a major level, so it'd be interesting to see what happens. Okay. Remember, you want high probability trades, not low. Sugar has been a nice trade again. Look at this one still going down. So basically, sugar and coffee has been great trade going down, and cotton's now being added to the list of all of the three major commodities that have been doing great this year from the beginning of the year. Unfortunately, a lot of people don't look at them. Reason why they're kind of stuck on looking at gold, silver, and crude oil and copper. But these have been the silent winners as far as trading is concerned for a long-term basis. And to see sugar is still making its journey downwards and does have a potential to keep on going all the way down to here, which is 1839, which is the next level. Not too far away, but this has been a great, great trade moving down. Okay. Remember, we talked about this entering this at the beginning of the year. So let's go look at mini gold futures. Gold pretty much has been tanking on the daily time frame. We're coming down to retesting this pivot low here at 1522. You could see here too. If it breaks this, this is going to go lower, a lot more lower. It has a potential coming all the way down to about here. I would say about right here at 1478. So it does have another leg there, but eventually it does have potential coming down and retracing more. Remember, this right here, a lot of people think this is a big downward movement, but compared to everything that's happened since 2009, this is a minor, minor movement. Even get down to 1478 is still minor. And most people look at Fibonacci's, and the Fibonacci retracement, believe it or not, this whole huge thing is in the 1300. So gold, this pullback, this profit taking is minor compared to everything that's been going on since 2009. A lot of people only heard about it since 1600, but if you think about it, there was actually a signal right around 985 here back in 2009 for us to get long Ichimoku wise. So I'll be very careful on trying to go long right now in gold. If you are, you're kind of being stupid. Silver still going down. Remember, we've been talking about pairs trading as far as this on Twitter, where basically we've been betting on silver going down and gold going up as a pairs trade. Now, the main trade in that pairs trade is the silver. We're betting on silver, but we're hedging with gold because silver is going down at a higher percentage than gold. Okay, so the gold is a hedge, and we're basically playing the percentage movements. Here you could see here, right here, we basically got out here because this was basically retesting the pivot low, so that pairs trade worked out really good. And if you look here today, silver's down 3.4%, whereas gold, if you look at it, it's down 2.64%. So this is still moving, silver still tanking at a higher percentage than gold is, and that's what we're playing when we're doing pairs trading. If you're interested in learning more about pairs trading, you could look at our pairs trading video on YouTube, or you could sit there and go to ichimokutrade.com and read more about it there. 30-year bonds, you can see 30-year treasury bonds is basically broken the resistance level here and is going up, up, up. This week we have to close above this level 147,002. If we do, this thing does have a potential going higher moving forward for the next couple of weeks and start another leg to the upside where it does kind of have a potential going higher and higher and higher. So this very, very key level that we have to sit there and close above this week. If we do, then this will keep on going higher. Corn, nothing really going on right now at all. It's just consolidating. Major support levels right here. I'll put an alert so you can see it better here for you. It's there. So this is a major support level there. If it breaks that, then corn does have a potential of starting to trend to the downside. So definitely keep an eye on this one moving forward. 5-year treasury notes, a little weak compared to the 10-year. The 30-year that we just looked at. It broke a resistance, but hasn't broken it with vengeance. It's kind of hanging around there. So this really has not doing anything yet. We got to wait for it to break it completely. Soybean oil has been breaking down. So nothing really going on here. It looks like it's trying to get its support level here, which is basically 48.15, which looks like a trend on the daily. But it's been a straight shot down, and it could sit there and get down to that level very fast. Soybean meal basically being bullish. Now it's getting top heavy over here. It's at a minor support level right now, so it's going to be interesting to see what happens at this level. If it could hold this level and break 440, this is going to go to a whole new level to keep on going higher. So it's going to be interesting to see what happens. Good pairs trade, which you can see right now. Let's go look at soy. Soy here is basically soybeans are still it's still bullish trending because this is a pullback, and major support level is going to be 1303, and you can see from the cloud. If you want to look at the pairs trade as far as commodity futures are concerned, you could basically bet corn going down and soybean going up, and that's a good pairs trade moving forward. Okay, let's see, oats, really nothing going on there, so we're not even going to talk about that. 10-year Treasury notes has broken its resistance level just like the 30-year has, and it's going higher and higher and higher. This is a level where we have to close above this week, which we already did, so it's not a level. So this is very strong compared to the 30-year, and this does have a potential to keep on going higher now because it's starting another leg trend up. Okay, and then wheat. Wheat is doing nothing at all. Had this big movement here where a break is basically broken resistance level. It's got to sit there and hold 676 this week. If it does, then it can go higher. It could probably go higher. It's about 740. That's about it. But this is not a good trade at all. I wouldn't look at this one. You've got many other good trades right now. Corn looks like it has a potential of breaking down. And then you got a couple of others I think we talked about. Not lean hogs, but yeah, lean hogs breaking down to the downside. So those are two potential opportunities that you have moving forward. If you have any questions, please don't hesitate to email us. You could also access any of our free videos here at ichimokutrade.com. That's where all our resources are now located. Thank you and have a good week.